Welcome back to the channel. I'm going to be going over my simple dividend portfolio on Invest Engine, which is in my ISA account. I've added a few things, so I thought I'd just go over it. Right, the ones I've added is Pan Asia Dividend Aristocrats. So let's go and have a quick look. So over the year, it's 15.91%. And over the max, which is since April 2020, we have a 40.75%. So that's a good return. And the dividend yield is 4.9%, and it's semi-annually. And the description of what it invests in is here. A group of companies across Asia-Pacific region that have a long history of paying reliable and rising dividends. If you look down the bottom, you can see there's 97 stocks, and here's the percentage breakdown and the companies. And the reason I've added it is I try and get the dividend yield as close to 5%. And it's also diversifying, so I don't want to be just in America. And also, I want a good yearly return. So the dividends are important, but I don't just want the near 5% a year. I want some growth as well. So that's why that one's added. So it's several reasons, really. Right, let's look at the next one I've added. Right, North America. So it's 11.81% for the year. And over the max. So since January 2017, it's done 169.11%, which is really good. The dividend is 0.78, paid quarterly. Now, that's not the highest dividend, but the growth is good on that. And again, it's about diversifying. So it's got 578 stocks in it, and you can see the percentages here. But that has a good return, so that's that one. So S&P Global Dividend Aristocrats, a 10.19% return for the year. And since January 2017, 38.74, and a dividend yield of 5.25% quarterly. So it's got a good high dividend yield, but you can see that over the longer term you're not getting so much growth there, even though the current year is quite good. So it's a bit of a juggle between the dividend and the return. Right, here's the next one. FTSE Emerging Markets Dividend, high dividend, low volatility. So we've got 10.42% for the year. The max is 33.97 since March 2020. Dividend yield is 6.08%, which is really good quarterly. And you can see by the description, focusing on companies from emerging markets that have a history of paying higher than average dividends and tend to experience relatively smaller price fluctuations. Yeah, so dividend ETFs normally, when the market goes down, they don't go down as much, which is good. So 184 stocks, you can see the percentages and the names there. So that's a good dividend yield, so that's why I've added that one. Alright, I've added this one. So over the year, 4.6, and the max 15.43 since July 2018, and we've got a 4.83% dividend yield paid monthly. Now the reason I've added this one is when it comes down to retirement, a lot of the other ETFs, the dividends they pay out quarterly or half yearly, but I really want some monthly income, so this is why I've added this one. And this one focuses on providing income by investing in a diversified range of short-term bonds and money market instruments. So you're not getting the higher return overall, but you are getting a dividend yield of 4.83, and it is getting paid monthly, so that's why I've added that one. And this one is similar as well. So that one's got a negative 0.49 for the year, and the max. This one has a 5.23 dividend yield paid monthly, and it focuses on companies that are part of well-known stock market index that includes large tech focused businesses. So again, it's for the yield and for the to be paid monthly. So that one's what that's about. So, but like I said, there won't be hardly any growth with them ones, but I'm okay with that because the yield's high. And then I had gold in here, and let me show you. And for the year, it's 33.84. But I've added this gold, Invesco Physical Gold, because that's at 38.16. And the difference is, on this one it's hedged. So you can see it hedges out the currency exposure to the British pound. So it's just to do with exchange rate. But that's a really good return for a year. And then over the max, you can see since November 21, you've got 78.5%. Now you may be wondering why there's gold in the portfolio, considering this is a dividend portfolio. It is focused on dividends, that I'm trying to get as near as 5% as I can, but I do want growth as well. And with gold, if you've got a yearly return of 38.16%, when it comes to retirement, well, one, it will grow quickly. And then when it comes to retirement, if you had that year, for example, 38.16 return, you can take what you want out as a dividend. Does that make sense? So you can sell a bit of it. Plus, it's a really good return, so that's the reason it's in there, even though it's not strictly dividends. And then I also added silver. So over the year, a return of 25.45, which is really good. And it's the same principle as the gold. So we've got 195% since January 2016. So again, that's a really good return. So that's why that's in there. So what I've ended up doing is taking some out of the equities and moving some into the bonds, which is here. So I've got 12% in bonds now, and I've also got 15% in the gold, 2 golds in the silver. And apparently the gold, I'm not sure about the silver, I haven't looked into it, it holds up better in down markets as well. So if people are panicking over the market, they tend to pop it in gold. Also, in the last few years, well, I mean, it's had a good return over the longer term because I just showed you that, but a lot of the banks and a lot of the foreign companies are investing more into gold. So fingers crossed it'll have some good returns going forward. So that's the reason why. So it's more diversified. but also trying to keep the dividend yield. And the plan is, when it comes to retirement, you can see here the auto invest button is on, so any cash and dividends will just be reinvested. So every year 3.37% is from the dividends is getting paid back into my portfolio, as well as the top-ups that I'm doing. So I'm putting £50 a month in, but I do extra top-ups. So this month I've put 4 top-ups of £50. So I know it doesn't look like a lot, but I've only just started it. It's only been running since the 3rd of July, so it's not even a month old. But the 3.37 will be reinvested along with my top-ups. But when it comes to retirement age, I just need to turn this off for reinvesting dividends, and then I'll be able to take out my 3.37 into my cash account and spend that in retirement. So that's the plan. So this is an alternative to the 4% rule, where you just have a pot. So say you've got 100 grand invested and you take 4% each year. I don't want to sell much of my portfolio. I will have to sell some of the gold and silver, but that's got good returns, so I could just choose what percentage I want to. But on the dividend side, I don't actually have to sell the assets. I'll just use the dividend yield. And also, because this is in my ISA account, I don't have to pay tax on any of it. Not on the dividends, not on the growth, not on anything. I do have it in the SIP as well. The SIP is good, but you do get so if you put £100 in, the government will top it up by £25 on the rebate, which is great. But when it comes to retirement age, only 25% of the pot is tax free, and then the rest is taxed on normal income like it was a job. So this is the reason I've got this in my ISA account. And also, I don't have to wait to retirement age to take this out if I want. I can take it out when I want. I can take it out next week if I want to. It's very flexible and it's very tax efficient, where the pension is not so, but it's good with the government top up. So there's good in both, but I'm trying to use my ISA one because I don't like paying tax, basically. So there we go. There's an overview of what I've added. The portfolio has done 1.33% in the short time that it's been opened. I do a weekly update on it. You can see it's at 3.37 yield. The cost is 0.38. You don't actually get a bill for the 0.38. It's just reduced off it's in the background, should we say. So you don't have to worry about paying any bills on this. And like I say, the dividends, when the dividends come in, you'll just see them in here. They haven't come in yet because, well, most of them are quarterly, half yearly, apart from the new ones I've just added, but they need a while to, come in. So you can keep an eye on them there. And that's about it, really. I don't just invest in dividends. I have a growth portfolio as well, which is doing about 5% in the sort of same period. So I'm not just in dividends because I do want to increase my wealth as well. But the long-term plan is to have it in dividends and growth, but nearer retirement, I'll have less in growth and more in dividends. So that's the plan. I need to grow it in the other portfolio, the growth portfolio, but near retirement, I can move over to this one. So it's a bit more sort of steady, reliable, and diversified, really. So that is my plan. Please like and subscribe. I do have playlists on my channel for both the simple and the growth portfolios, and I do weekly updates. So, and if you've got any questions, please pop them below. And that's about it. Thank you.